Welcome back to Explain the Charts, where we break down the latest market movements, combining news and technical analysis to give you actionable insights. Today, we're diving deep into the USDJPY pair, exploring the recent price action and what it could mean for traders. As of right now, September 25th, USDJPY is currently trading around 144.755, with a 1.07% increase in the past 24 hours. Looking at the daily chart, we can see a clear bullish trend in USDJPY over the past few months, with the pair breaking above several key resistance levels. In the news, we see that the Japanese yen is weakening against the US dollar as investors assess the Bank of Japan's, BOJ, monetary policy outlook. BOJ Governor Kazuo Ueda indicated that the central bank has time to evaluate market and economic conditions before making any policy adjustments, suggesting no urgency to raise interest rates. This dovish stance from the BOJ continues to put downward pressure on the Japanese yen, further bolstering the bullish sentiment for USDJPY. Looking at the chart, we can see that the price has been consolidating around the 145.00 level, suggesting a potential breakout to the upside. If the price breaks above the 145.00 level, we could see a further rally towards the 147.00 level. However, it's important to note that the US dollar to Japanese yen pair remains downward biased, as the exchange rate is below the Ichimoku cloud and the 200-day moving average. Therefore, traders should exercise caution and use appropriate risk management techniques when trading this pair. Let's zoom in on the 1-hour chart to get a better view of the recent price action. On the 1-hour chart, we can see that the price has been consolidating around the 144.50 level, with some volatility, but overall, remaining within a narrow range. The 1-hour chart shows that the current consolidation is a continuation of the bullish trend seen in the daily chart. Traders should look for a breakout above the 144.50 level, which could signal a further rally towards the 145.00 level. However, if the price breaks below the 144.50 level, it could indicate a short-term pullback, but ultimately, the long-term bullish trend may still remain in place. Now, let's switch to the 15-minute chart to see what the intraday picture is telling us. The 15-minute chart shows a more volatile picture, with some back-and-forth movement, but still suggesting a bullish bias. In this time frame, we can see that the price is hovering around the 144.75 level, with potential for further upside movement. Traders should watch for a break above the 144.80 level, which could signal a short-term rally, but they should be prepared for potential volatility. The 15-minute chart highlights the short-term fluctuations in the market, but the overall bullish trend seen in the daily and 1-hour charts suggests potential for further gains. Let's go back to the daily chart and focus on a specific period, from September 11th to September 24th. During this period, the price has been consolidating around the 145.00 level, with a series of lower highs and lower lows, indicating a potential bearish continuation. However, the news surrounding the FOMC and BOJ policy decisions has contributed to some upward pressure on the US dollar to Japanese yen pair. The dovish pricing for the U.S. interest rate outlook, combined with the BOJ's continued accommodative stance, have created a volatile environment. The recent spike in price, leading to the current level of 144.755, could be attributed to this interplay between news and technical factors. In conclusion, the USDJPY pair is currently in a bullish trend, but traders should be mindful of the potential for volatility, particularly in the short term. Key price levels to watch include the 145.00 resistance level, which could act as a potential breakout point to the upside, and the 144.50 support level, which could be a point of short-term pullback. Traders should monitor the news surrounding the FOMC and BOJ policy decisions, as well as other macroeconomic indicators, for potential triggers for price movements. It's important to use appropriate risk management techniques and to have a clear trading plan before entering any trades.